Hi guys, so today's video is going to be about the 10 setups that I'm seeing that are ready to move with the markets. So as you know that I have been long for a while now. I'm seeing a few more setups that I particularly like that I'll be sharing in this video, and I'll also be sharing how I set up my charts because a lot of you had those questions. To start with, basically my charts are plain. As you can see, I don't put any indicator on them, I don't put any moving averages. It's all clean. The reason for that is if I put 10,000 things on this chart, everything will signal something different, which creates more confusion while trading. So that is something that I don't prefer. If I want to draw something, what I do is I usually open a second tab and then I put in my moving average or something like that. Once I see that, then I close it and then I go back to my chart. However, the only thing that I read is price action. So there's really no need for me to put anything else on the chart. So before we start the video, I just wanted to say that anything that we discuss on this channel, on this video, nothing is financial advice. All charting is for education purposes only. Let's jump in. The first chart that I like is Google. Now there's two of them. There's GOOGL and then there's GOOG. They're basically the same company. It's just different class shares. Doesn't matter what you buy. Just stick to one of the tickers, right? They move together. That is not an issue. Just stick to one of them. Yeah. All right. So in this chart, there are a few things in this chart that I like. First, I'm going to talk about the daily chart. Uh, so if you see here, this this is forming a nice inverse head and shoulders. See here, this and then this. Now, very interesting. It had a breakout. It formed this gravestone doji and then it came back down. However, if you see, it's still in this particular neckline. So for next week, we have to see that it crosses over 141 again. If it holds over that, then we can see a nice uptrend forming here. I also wanted to show you one more thing on this chart. Let me just remove this. I'm going to zoom out to the weekly chart. Have a look at this. This is forming another nice pattern here. So all in all, the daily and weekly are looking bullish here. Once we cross that 141 level, you'll start to see some upward movement. Now the key thing is break and hold. A lot of people are confused what break and hold really means. Just going to give you a quick example. So basically, in case of break and hold, you need to see that. So let's move to the daily time frame, and then I'll show you what I mean. So when you move to the break and hold, there are a few things that you see. First, the price when it goes over a certain level. In this particular case, it's 141. So you have to see how many times the price rejects. For example, it goes to 1410, comes back down to, let's say, it goes to 141.10 and then comes back down to, let's say, 140.95. Then it goes back up again, then comes back down down below 140. So you have to see how many times it does this. And after a certain point, you will see that it will start holding 141 level. Right? It won't go below that. If it's not doing that, that means the price is not holding. The holding of the price is not dependent on the candle close. When you look at the charts, you have to see how many times it's going above and coming back down. The less time it comes down and it holds that level, that is what we consider a hold. So there is no easy way for this. You just have to see the charts and you have to see how many times the price is going up and then coming down. So what happens usually in the case of hold is first the price goes 10 cents up, comes back down below 141. It does that 4 to 5 times and then it starts creating a pattern. It starts creating higher lows and keeps going up. In cases where it does not hold 141 and it keeps coming back down, you'll start to see some sort of a bearish candle forming, because what will happen in smaller time frames, if it keeps doing that, what you will see is it will go up, come back down. That will create some sort of a doji or a shooting star, and you'll start to figure out that this is a bearish candle forming, and then position accordingly. One great way to look at how the price is holding is, let's say we're on daily, right? And you want to see if 141 is holding. So what you would do is you go on a, let's say, 15-minute chart, and then you put your level at 141. I'm just going to put at 141. There it is. So you'll see like this, right? It goes up, comes back down, goes up, comes back down. And I'm going to show you this. Let me just mark this candle. Give me 1 second. I'm going to find the tool. This candle. Now, if you look at this candle, on a 15 minutes, it's just a one rejection, right? So you won't be able to tell if it's a proper rejection or not. What you do is you go one frame lower. See? It rejected. And then it created a shooting star. To go even in more minute details, you go here again. This was the candle. See? Went up, rejected. Try to go up again, rejected. Try to go up again, rejected. You see the price was not holding here. And then it created a nice downtrend all the way to 139. So that's how you see if the price is holding or not. So all in all, the Google chart looks bullish for now on daily and weekly. 141 to 140, 150 is, I would say, your key level. Look for that to hold in order for bullish positions. The next chart that I like is Nvidia. This is one of the most hated stocks for obvious reasons, because almost everyone missed this particular run up. Uh, this stock is an interesting study as well. You know, in times where people say that it cannot go above certain price, I saw people talking about it here. Personally, I've never longed it or shorted it, so I have no particular bias in this stock. So I saw people talking about how it cannot go over 250. Then there were people talking about how it cannot go over 300, 400, 500. Sorry, when people are still bearish this stock. So that is what been happening to the market as well, right? Where people are saying SPY cannot go for 8 weeks straight in a row, and the market just keeps going up. So you cannot tell the market it cannot do this. You just have to follow what it's doing. Just don't try to outsmart the market. Anyways, back to the stock. So similar to Google, it is also forming this nice inverse head and shoulders. Shoulder, shoulder, head. And this particular area is about 504. Take 505 for the sake of accuracy. 505 is what you should be looking at to hold. Now, I just wanted to share something else with you regarding this stock. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 rejections it had near this 490 to 500 level. However, this level keeps acting as a magnet. Despite the major fall, it keeps coming back to this level, and now it's gotten very tight here. So keep an eye on 504 level, 504, yeah. This is 504, 505. So that $1 range. Keep an eye on that level and see how that holds. Uh, the one thing about patterns is a bullish or a bearish pattern is not confirmed until it starts breaking out. So even though this is a bullish pattern, it is not confirmed until we see a proper breakout. That is the key. I will tell you why here. This is very interesting. Take a look at this. This was back in August uh, and late October. So people started yelling crash, as we know, we talked about it in the last video, and kept saying that, oh, look at this, this is a big head and shoulder, it's going to crash, it's going to crash. And then people went out and made big bearish bets, when all it did was create a hammer return here. In books, head and shoulders is a bearish pattern, and it should go down, but it doesn't. So what we have to do in this particular case, or in any case for that matter, is you wait for this confirmation. You wait for the breakdown. You do not enter while the pattern is forming. That is a bad way to trade, and more often than not, you'll be wrong if you don't wait for confirmations. That is one big thing that I wanted to talk about. Alright, so this is done. Nice inverse head and shoulders. Moving on to the next one is SHOP, Shopify. And here we go. Alright, so Shopify hasn't been getting much attention lately, but it has a very nice pattern. I'll show you. Take a look at this. I also posted about sorry. I also posted about this on my Twitter, but I just wanted to show you live here. And this is a very nice cup and handle pattern forming. Just gonna outline this for you here. There we go. So as you can see, it is forming a nice this cup and handle pattern, which is bullish in nature, of course, that you're seeing. So it had this cup and then a handle, then it broke out here. Now this is considered the lid of the pattern. Usually after this is broken is when you see a nice up move. So for this, the level is about 79 to 80. I would say take it 80 for the sake of accuracy. $80 range is what you need to see that it breaks. Once that breaks and holds, and as I mentioned, the concept of holding, that is when you'll start to see a nice uptrend forming here. So I wouldn't be surprised if it goes over 80 and then comes back to retest this particular level and then moves up again. Recently, what we are seeing is once such patterns break out, they do not come back for a retest. AMD did not come back for a retest. Coin did not come back for a retest. But those are different patterns, right? So the key here is break and hold only. And after that, you'll be able to see a nice uptrend that may form here. And okay, one other thing that I did want to pay attention to is this is a weekly chart, right? On a weekly chart, when the time frame is this big, you do not expect the move to happen in 1 day, 1 hour, right? If you're trading on a weekly chart, just have patience and let the move play out. So that is one thing I did want to bring attention to. Some people, they trade on weekly charts and they expect the move to happen in 1 day. That is a very bad way of trading. Moving on to the next chart, what we have is MSFT. MSFT lately has been not moving really. It just has been flat, just consolidating in the same range. Now, a lot of people are calling this a bear flag, but let me show you how I see this. This is very interesting. I see this more of a triangle pattern. I'll show you what I mean. Just 1 second. There we go. See, this is a nice triangle pattern. Now, triangle pattern they can break out either way. So when we play a triangle pattern, what we have to look is we have to look for a break and hold on either side. When it's between this particular triangle, all it will do is it will kill premium for the options. That's what we have been seeing lately. The last this is the last how many days? One. So we this is the last 1, 2, 3, 4, 5, 6, 7 last 1 hour candles basically have been flat. So you're seeing this is just killing the premium here. That is why what we do in cases of this particular triangle pattern is we either wait for a break here or a breakdown of this before entering any particular position. So the breakout level of this is 378. 378 is what we need to break and hold in order for us to get back near these particular highs. And if this happens to break towards the downside, then they need to break 370, I would say 374. 374 is what they need to break and hold for the downside pattern, and testing here these levels here and then here. That is what the bears need to break. For the bulls to come back into power, they need to break over this 378 level. While it's between in this triangle, it will just keep killing the premium on both sides. So that is not worth trading. So wait for the break and hold of either side. Alright, so the next one that I have is Netflix. This chart is particularly interesting. I'll show you why. So this was a nice cup and handle forming here. There we go. This was a nice pattern here. We broke out, and once we broke out over this lid, we got a nice retest here. Now, this is the same thing we were talking about Shopify, right? Breakout and retest. The breakout was 491 and went to about 500. It came back to retest this lid. Now, going forward, the key here is this area. This area that needs to cross here. I'm going to show you on a smaller time frame. So, see this here. This is a nice downtrend. This particular area. Look for 495 to clear, right? Right about here. The break and hold of that will be the confirmation that retest is complete, and the stock is ready to move back into the uptrend. 495 break and hold is what we need to consider here. Another thing that I wanted to share in this particular stock. Oh, look at this. This is a big gap. I'm not big on gap fills, but if anyone is, then this is a gap that it's looking to fill. It's almost filled. It's not fully filled yet, but it's getting close. So keep an eye on this five. Once 495 breaks and holds, this 507 and 508 area. The law of the gap is the rule is once the gap fills, the price tries to return back. The price tries to reverse. So that is why it's important, if you are bullish, to keep an eye on this for 507 and 508 level once 495 crosses. That was Netflix. The next one is Bank of America. I'm not big on financial stocks. They have been underperforming for a while now, all the way back from 2022. But this is forming a nice pattern. It sort of formed a W and reversed. Keep an eye on this. What I am looking for in this stock is this area here. Extend this. So about 34, 35 level. Keep it 35 for the accuracy. So 35 level is what you need to be looking at. And if you see this, the stock came up, made this nice bull flag, and now it's trying to go back up. This is a major resistance here. So 35 is what needs to break and hold for the pattern to continue here. So nothing big here, not much going on, but keep an eye on this, especially with the rate cuts in news. It's good to keep an eye on these financial stocks. The next one I have is Oracle. So this stock is interesting for a few reasons. First, now you see this is trying to break out here. We have seen multiple attempts to cross this area. More often than not, it is tried. It is considered to be a bullish price action. However, in the case of Oracle, if we go back, this gap down first of all was due to earnings. If we go back, we see that Oracle gap down on earning last time as well. See how it came down, went back up, chopped here, tried to break out, failed, and then created a new low. So keep an eye on this. Even though the pattern is acting bullish, you need to know what the stock is used to doing. So what I would do in this case is treat this as a triangle and not treat this as a bullish parent or anything. Treat this as a triangle and keep an eye on both sides. Keep an eye on this particular area. I'm just gonna 107 and 105. So 107 for the upside break and hold, and 105 to the downside. As I mentioned, in most cases this pattern is bullish, but however, in the case of Oracle, it has done this several other times as well, where it did not, it wasn't bullish. That is why we treat this as a normal triangle pattern, and we wait for the break of either side to play this. Just be careful on this stock and wait for confirmation. This stock is very notorious for doing this sort of fake outs. Next one I wanted to talk about was Amazon. I posted about Amazon when it was about, I believe, 141 or 142 on Twitter. That we were long in the group. And then we saw this nice move all the way to 155, which was very interesting. Now you can see that. Just gonna zoom out on this chart. I don't believe the move is still done. We may see more of this. Just gonna point it out. Give me 1 second. Take a look at this. The inverse head and shoulder is still there. We got a slight break of this neckline. However, as soon as we started to break this, we came right back down. Just to retest this area, I'll show you on the daily chart. See, we're just retesting over here. Here, bounce, 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 and then let's keep on bouncing here. So what we do is, in this particular case, is we wait for the break of this. Oh, sorry. 1 second. Just gonna erase this. Put this here. There we go. This was the recent high that led to this retest. We wait for this 155.33 area to break and hold. We do this because this was the recent high, And in order for this massive inverse head and shoulder to actually play out, we need to break and hold the recent highs. This is very important. Once it does, you'll start to see a nice uptrend forming here. One thing I did want to share is once it does break, you see there is very little resistance until maybe 158 and then all the way to here 163. So that is Amazon. Wait for the break and hold of 155.33. Once that happens, you should be able to see a nice uptrend forming here. And I'll move on to the next one. Amazon. Then I have a Chinese stock that I like, Neo. Believe it or not, it was a $67, $68 stock at a point of time, but that was the COVID mania in the stock market. However, it is starting to heat up again. Take a look at this. Look at this. Massive downtrend. All the way from the all-time highs to here. It is on the verge of breaking. $10 is the main resistance that it needs to break and hold in order for this particular big downtrend channel to break. Once it does break, again you'll see a nice uptrend forming here. The key is this $10 range. I'll show you on the daily chart what I mean. This. From October, this was a major area of resistance. See, it rejected here. A big red candle. There was a 17% sell-off that day on 19th September. So this is a massive area, $10 area that the stock needs to clear. This particular supply zone and this downtrend, they happen to break. They both happen to break at the $10 range. So keep an eye on this. This is developing a nice bullish pattern. Like I said, the downtrend needs to break first, and then the $10 range needs to break. Both the resistances lie at $10, so that's the key. Next I have is avgo. This is another stock that was recently talked about a lot. Just massive move after the earnings. I want to show you something on this stock as well. So, as you know, that shooting star candle is a very bearish candle, right? So this was a candle that formed the week of 30th May, and everyone turned bearish here. They were telling the stock is going to crash all over Twitter, Weibo, all that nonsense. What the stock did was consolidate. See, it went down, created this doji, and then just consolidated here before this massive 20% rally. So the key here is that what I'm trying to explain is, yes, the candlestick is important, but the overall price action and the trend of the chart is more important than the candlestick itself. This shooting star didn't work, but this did. This created a shooting star. We had a 5% fall and then a lower bottom and then a hammer and then rally. Similarly, this shooting star, this doji worked. The shooting star worked. We did get a nice fall, 6%. However, the key to remember is what time frame you are trading on. If you're trading on a weekly time frame and you were looking at this shooting star, you need to wait for the second candle confirmation. If the second candle is a doji, then that is not a confirmation. Anyways, going back to the 1 hour chart, take a look at this. Another triangle here. Lots of triangles forming. Well, the reason for all these triangles is they're trying to create a dilemma going into 2024. Everyone is screaming crash, so That is why there's a lot of confusion on the charts as well. But the good thing about triangles is that you have to wait for the break and hold of either side. You don't trade when when it's in between the triangle, because you see there's very little space, right? So all it's going to do is going to chop until it breaks over. I'm going to put 1132 to the upside, and 1112 to the downside. So if you are a bull, you want to see 1131 break and hold, and if you're a bear, you would want to see 1112 break and hold to the downside. Once it does, then you'll start seeing those bullish and bearish patterns accordingly. All right, so this was avgo, and back to the SPY. Now we're done with our charts. These were the 10 charts that I like going into 2024. There are more setups brewing for a nice move. I'll share them in the next video as I need to see more confirmation on them. Hope you enjoyed the video, and take care.